Hello and welcome to today's edition of Charting the Markets. With me, Sean Murison, Senior Market Analyst at IG South Africa. Markets are in risk-off mode, and that's after yesterday's Fed meeting. While rates didn't change, we did see a bit of a hawkish guidance, saying the rates could stay higher for longer, and that has seen some strength return to the dollar, and certainly equity markets under a bit of pressure. Today we have more central bank activity, and that's in the form of the Bank of England's rates decision and monetary policy statement. Markets are divided 50%, 50-50 in terms of whether we'll see a 25 basis point hike or not out of the region. So let's look at some charts and see how they are setting up. Starting off with the US dollar, the dollar index, the trend has affirmed as up. I think that long-term trend is up. We added 20 and 50 period moving averages in conjunction with what we have is the 200-day simple moving average. You can see they're in line with the shorter moving average is above the medium-term moving average, which is above the longer-term moving average. So we have a correct alignment, suggesting that those trends are now up. And for the sake of not cluttering the chart, we've just got the 200-day simple moving average, our blue line on that chart. Now, we are sitting in overbought territory at this point in time. And so ideally, for me, preference would be to see a bit of a pullback from overbought territory, in which case we're looking for long entry onto the dollar basket. Now, more aggressive traders might see this move above that 104.95 level as an upside breakout, ignoring that overbought signal, which carries less relevance than the trend. But like I say, aggressive view and targeting a move to about that 105.30 mark. If we zoom out, if we get through that, we start looking at levels about 106 to 107 as next upside resistance targets. They're probably about 106.20, even 107 or 106.80 odd on the way up. So at the moment, long-term trend is up. We're keeping a long bias to trades on the US dollar. We have had a short-term upside breakout. Aggressive traders might see that as an entry opportunity. Discretion is needed as to where to put that stop. Bit of a tricky one when you're trading at short-term highs. Like I say, my preference would rather to see a bit of a pullback on that dollar from overbought territory. Sometimes waiting for those pullbacks, you do end up missing out. So looking at the euro dollar is, I think that longer-term trend can be considered sideways at this point in time. Although the short to medium term momentum is also negative at this point in time. But we haven't made new major highs or major lows. We have actually found a bit of support at that 1.0630 mark, but we are in oversold territory from that as well. Now, that might be suggestive of a rebound, but not really encouraged when we see this, stochastic or an oscillator laboring in overbought or oversold territory. So I think if you're looking at a reversal there, I want to see this little intraday move higher have a little bit of legs and see, a close above this 106.85 level. And we'd have a bit of a W-type shaped bottom, suggesting that we stop making lower highs and lower lows, and we could be starting to make short-term higher highs and higher lows. Until that, I think this setup does still look quite bearish. And we have this bearish reversal off resistance, which is at 1.0685. That initial target was 1.0630. Now, to unlock perhaps further decline here, so euro weakness, dollar strength, we're going to see a close below that 1.0630, and that'll put that 1.05313 level in target. Now, looking at cable, and obviously cable short-term direction will be dictated by what happens this afternoon's Bank of England monetary policy statement and rates decision. So at the moment, though, the momentum is down. So it's showing you that pound weakness relative to dollar strength. Also after yesterday's Fed meeting, but we are finding testing 1.2300 as a level of support. And we're watching that level quite closely. Now, close below, I'll probably wait to see, firstly, the outcomes of that BOE meeting. But certainly a close below would unlock possible further declines with 1.2160 as the next downside target. Now, if we do see a bit more of a hawkish Bank of England, maybe we'd see a bit of a price reversal there and this level would hold, then we could consider looking for a long entry. Although maybe looking for a little bit of extra confirmation, just drawing a little trend line along the tops that might be able to just sort of help as a bit of a confirmation. We do think that the longer term trend is sideways for cable at this point in time rather than down. We have moved below that 200-day simple moving average, but that to me, it's been recent, that move below, and that is a suggestion that the uptrend is broken. It doesn't necessarily make it down, although we do have a bit of weakening momentum for the pound right now. So watching this level, 1.2300 quite closely. I think before getting along, we need to see a lot more confirmations. And we certainly, for the short side, watching this level and close below could suggest that downside break, and 1.2160 as a possible short-term target. So moving over to some indices now, starting off with US Tech or the Nasdaq 100. Now, long-term trend is up, but the short to medium term, we do have this sideways consolidation. The long-term trend being up suggests keeping a long bias to trades, although we don't just buy it anywhere, we try to pick it off levels. Now, if we added that 20 and 50-day simple moving average, I'll just do that quickly. Another more evidence of that sideways consolidations when you see those prices, whipsawing back and forth through those moving averages, just confirming that. So I'm going to take those off now. So for me, now that we've had that move lower, that sharp move lower, I'd like to see where this move ends. We have now ticked into oversold territory, but we want to see where the price does find an end. We want to see a bit of a bullish candlestick pattern, a price reversal, just the price ticking back after falling for a little bit, maybe closer towards that 14,660 mark could be an opportunity. And if we do get something like that, we'd be targeting a move back up to about 15,250. So because of that longer term trend being up, we're not looking at trying to short this move lower, but rather just waiting out to see how far that weakness takes us. We'll start to become concerned about the longer term uptrend breaking. We start trading below major lows, sitting about 4,285 when below that 200-day simple moving average. That is far away at the moment. Our assumptions is a shorter term correction of a longer term uptrend. We're going to see how far that correction goes. Looking at the S&P 500, a similar picture. Obviously, a lot of stocks weighted in both indices. Well, we had this little bit of a consolidation here between 4425 and 4535. We do have that longer term trend that is still considered up, but we have had a breakout, downside break from the short term consolidation. It is targeting move back to about 4330. If you're being a bit more conservative, maybe 4350 odd on that downside. We want to see that this move lower has come to an end again with that price ticking back, bullish candlestick reversal, bullish engulfing, bullish harami, piercing line, anything that just basically goes from a red candle to a green candle in consecutive days. But short term, we have a downside breakout. Longer term, uptrend is considered. We're waiting for the weakness to play out and waiting for a bullish reversal before looking for long entry on that US 500, the S&P 500. Now, the DAX picture is slightly different. We have started trading below that 200-day simple moving average. We've been started whipsawing back and forth through that. So the longer term trend bias is now considered sideways, and we're looking to trade between the levels. What we had here is a bearish reversal. This long wick candle is what we call a shooting star, and we had some confirmation with this big red candle, a reversal of that 15,990 level. Now we are still drifting lower. The momentum and the downside support target is sitting at 15,485. Now you could be a bit more conservative, maybe in a 15,570. Just where my mouse pointer is there as a possible target. And we do have some of these longer, lower wicks emerging. So it's showing there's a bit of accumulation every time that does sell off. But we'll see how the day goes. At the moment, as the picture stands, downside target sitting about 15,485. Now for me, I'll be waiting for the price to get towards that level, hopefully tick back up off that level, and then looking for long entry, targeting a move back to 15,990. Now, we are sitting in a range-bound trading environment, so we wait for trading. We look to trade between the levels, or we're waiting for breakouts of levels. Now, when you talk about that type of environment, it has been evident on the FTSE, and we have talked about that at length on that FTSE 100, and has worked out relatively well, conforming to the levels, and certainly certain levels are showing to have relevance. So we assume resistance, like at the 7,700, but it is acting as resistance. The price has stopped there quite a few times. Previously, when the price came from above, it found it as a level of support, and now we're finding resistance at that level right now. So longer term trend is sideways. We've been trading nicely between those levels. Now we're watching to see how do we handle this 7,700 level. There's a bit of an inverse correlation with the pound. I think one way that we could look at it that right now is, well, if we're looking for an upside breakout or a confirmed reversal down. So we view this as a short-term consolidation between 7,640 and 7,700. We're going to wait for a break of either. A downside break of that call for 7,560. You might have a stop loss, the midpoint of that range. To unlock further gains, you want to see a push above that 7,700 mark. It's a strong close above that, suggesting that we've now gotten through that resistance, broken the level, and we'd be targeting 7,870. I think in that situation, still using a midpoint of that range as a possible stop loss indication if it did move the wrong way or unfavorably against us. So short-term range, waiting for a breakout on either side, up or down. And maybe we get that today with the BOE meeting. Now looking at commodities, starting off with Brent crude. The trend has moved from down for quite some time, sideways, and now I think we can confirm that the longer term trend for is up. Just to show you, if we add those moving averages, 20 and 50, you see those are in proper alignment, with 20 is above the 50, above the 200. Proper order, what we call in moving average terms, so short, medium, and longer term trends have been up. Just to remove a bit of that clutter. But we have been overbought, and we are seeing a bit of a reversal from overbought territory. So $95.40 per barrel has been a level of resistance. We have this bearish engulfing candle pattern off that level, and we are trickling lower. Now, if you're respecting trend, if you're a trend follower, you wouldn't be looking to short the move lower. What we'd be looking to do is waiting for that move lower to play out, find some support, give us an indication that it's stopped falling, and then try to join that longer term uptrend. And the initial support there for me is sitting about 89.10 on that price of Brent crude. Now gold has been quite a frustrating grind over the last little bit. View the longer term trend is sideways, so again trading between levels. We had a bit of a bullish reversal here, just marked with that red circle there. That was from oversold territory, a quick dip into oversold territory, and we've rallied and now found resistance on that 200-day simple moving average. Initially, we had a target there about 1955, and a possible stop after that move higher there at about 1920, but that is being tested right now, and we are finding resistance. This star shape is called a gravestone doji. It is a negative candle. suggesting a short-term top, so relative to the move higher. And when I look at those moves, I'd like to see a follow through with a lower close on the next candle, which is what we're getting right now, and maybe using a close below that 1920 as a possible downside move, in which case we target the low here, about $1,900 to $1,895 per barrel. I mean, dollars per ounce. So we're not talking about crude. That's it. We've had a reversal. That reversal's petered out, finding resistance. Confirmation of this bearish reversal now in play would be a lower close on today's candle, preferably below that 1920 mark, in which case we'd target 1900 and 1895. Last but not least, platinum, another range-bound price environment at this point in time. The reversal level seems to be a little bit, maybe a bit too, 875, maybe a little bit too low. Maybe about 890 seems a bit more relevant in terms of a buy area for platinum. Every time it seems to get down there, we do have a bit of a rally. We've been looking at these levels. We've been trading quite nicely between them. Most recently now, we do have this bearish engulfing, so a negative candlestick pattern, price ticking back after rallying up off this 940. We did actually have a slight move above there, 943 odd, but that's been negated. So if it was considered a breakout, it's a failed breakout. And what we do have now is a bearish engulfing and the price moving down. So 920 being the initial target where we're trading right now. And if we close below there, we start looking at about 895 as the next level of support on the way down. So the charts from me, Sean Murison, Senior Market Analyst at IG South Africa.